afternoon and welcome to Biztech's Asian Midday Market Watch, powered by our Rajhi Bank, Malaysia. It's Thursday and we have our regular Thursday guest, David Kuo, founder of the Smart Investor out of Singapore, as our guest today. David, welcome back.
Selamat tengah hari, Brian.
Now, David, I'm going to come back to you and get your sagely advice after we take a look at cryptocurrencies and regional stock markets. Bitcoin is at 22,923.4. It's down 2%. Ethereum is at 1,488.16. It's down 4.7%. Now, looking across to regional stock markets, the SGX Straits Times Index is down 0.75%. Bursa Malaysia is up 0.81%. Shanghai is down 0.45%. The ASX All Ordinaries is up 0.22%. The Nikkei is up 0.21%. The Hang Seng is down 1.24%. And rounding up the numbers, we've got the Kospi, which is up 0.66%. Now, David, what's your take on market performance in the first half of the day?
Okay, I think a lot of water trading again. If we have a look at what's been happening over in Wall Street, the futures are indicating that, maybe the good run has paused for a bit, and maybe there's been a bit of profit taking. But ultimately, I think everybody is very cognizant of the fact that there will be a Fed meeting coming up next week, and they are just waiting to see what it's going to be. There are still arguments as to whether or not it's going to be 0.75% increase or a full 1 percentage point increase. But ultimately, I think people are a little bit cautious. I mean, we heard today that the Bank of Japan has left interest rates on hold. So Japan is not in any way moving down the same direction as the US in terms of interest rates. And it just wants to sort of keep interest rates nice and low because ultimately, I think the question that everybody is asking is, what do we fear more, inflation or recession? And I think in the case of Japan, they fear recession more than inflation, whereas over in the US, they fear inflation more than recession.
But that's also because, again, historically, Japan has had a huge problem initially with deflation for more than a decade. And then after that, trying to hit a 2% inflation target, which it never quite hit.
Yeah, well, I mean, Japan is a very special case, but they also need to remember that if the US dollar keeps on rising and the Japanese yen keeps on falling against the US dollar, it therefore means that whenever they buy materials from outside of Japan, all the raw materials they require, they're going to have to pay more for it. And so that is going to be inflationary. But maybe in the case of the Bank of Japan, they're putting it on the back burner and they say there's nothing much to worry about at the moment, in much the same way as China says there's not much to worry about at the moment. So therefore, they're focusing more on the supply side. And they're saying that if they can keep the economy ticking over, that will be good for Japan in the long run. It really is a difference of philosophies as to whether or not you are more intent on controlling inflation or whether you are more terrified about some kind of recession happening.
But then you talk about being terrified about some sort of recession happening. The signs are there even among the big tech giants. So we have everyone from Microsoft, Google, Facebook, either slowing down the pace of hiring or putting a hiring freeze in place. Is that a bellwether then? Because there are some analysts who say the US is already well in recession mode right now.
Yeah, I mean, isn't that really what the Federal Reserve is after at the moment, to try and sort of not to stoke unemployment, but what they're saying is that if the unemployment figures are not as bad as people think, then what will happen then is that workers will demand higher wages. I mean, we're seeing this in a lot of places, Brian. A lot of places around the world, people are very unhappy about the pay rises that they are getting. And they're saying that no way, is a 4%, which used to be quite good, a 4 or 5% pay rise is going to be enough to cope with inflation. I mean, I see that in the UK, inflation at over 9%, and they're offering workers 4 or 5% pay rises. And they say that is nowhere near enough. But I think if we go back to your original point about, these tech companies, they've seen this story before. I mean, they've read this book before, they've seen the movie, they even have the T-shirt. And what they know is that the Federal Reserve is going to be intent on increasing interest rates in order to try and sort of control inflation. And that is going to bring on recessionary pressures for the US. And back to your point about, is America already in recession? Some people say it already is, because the indicators that we get, the economic indicators, are always backwards looking. So some people are saying that America is already in recession. And these tech companies are responding to that, and they're saying that the one thing that we can control is wages. And so therefore, if we slow down the hiring process, we can therefore protect our cash flow in some way and hopefully be able to reward our shareholders over the longer term. So I don't think we should be too worried about these companies, these tech companies, slowing down their hiring process. It's not as though they're making people redundant. What they're saying is that we're not going to be hiring as many people because we can see on the horizon, the economic conditions are going to be quite harsh. And it goes back to what Jamie Dimon said, a hurricane is coming, and these tech companies are hunkering down now.
Now, David, as always, thank you very much for your insights, and thank you very much for coming on the show.
You're welcome. Thank you.
Now, we've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia. I'm Brian Fernandez. This video and podcast will be on our website and our social media platforms, as well as Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.